Investing is a hot button topic right now, especially as it's moved from being more of a corporate slash very rich people type of item into every single home. There are so many people looking into investing right now, especially as inflation goes up, the economy seems to be getting worse, and a lot of people are wondering about other ways that they can make an income without actually having to go to their daily 9-to-5 job and make this extra income for themselves. Investing is actually a really cool way that people can continue to have their money work for them instead of working against them. The hard part is inflation is a reality. You can't escape it. And so if your money is not actively working towards making you more money, it is actively working against you because of inflation and the rising costs. So $40,000 today is not going to be worth the same amount as it will be in 10 years. The point being, all of us are realizing, and many people know, that investing is needed in order to continue to grow your net worth along with your money and resources, in order to sustain your standard of living or continue to grow, whether that's for a specific goal or for retirement. I think a lot of women really struggle when it comes to understanding investing and investments and how that whole process works. And I created a video about 5 different financial accounts that every family should have that I will link up above. But let's dig deeper than that. Let's look at types of investments, what investing is, what the purpose of it is, and how you can get started today. What is the purpose of investing? Investing is very much a long-term goal that you're putting your money into in order to receive some sort of financial benefit. There's a lot of different types of investments, but overall, investing is very much for the long term. In the short term, there is, did I have a video about this already? No, I don't. Investing is very much for the long term. Now, when you have a short-term plan that you're trying to meet, in general, many people don't necessarily, and the statistics really don't necessarily recommend using that short-term strategy to kind of buy some random stocks and hope that they go up in value. That's not really investing. That's gambling and hoping for the best. Investing is more so of a highly dedicated approach to putting your money and investing it into various investment vehicles that are going to grow over the long term or for a specified period of time. With investing, a lot of people think of quick returns, high dividend paying stocks, or high interest rates that are just going to give them passive income over and over and over again right away. Let me tell you, this is not for most people how it works. Investing takes a lot of dedication, and in general, it's very much a long-term goal. The statistics show that over years, specifically 10 years or more, investments tend to do very well and grow a certain percentage point over that time, depending on the type of investment you're looking at, which is why investments with a lot of statistical example and history are a little bit less risky than those that are just brand new companies and they don't have a lot of history to look at. When you're thinking about investing, you have to understand in your brain that investing does take money. And I know that this should be so obvious, obviously, like, yes, it takes money. But I think a lot of people don't really understand that in order to make a sustainable passive income from investing, it actually takes a lot of money invested. And this is why there's so many retirement plans dedicated to those investments, because over the long term in retirement, when you have, $1 million or hundreds of thousands of dollars, yes, you can live sustainably off of that based off the interest or the dividends that the stocks or that the bonds or that whatever you're invested in is paying. But in the short term, if you don't have $1 million laying around somewhere, it could be very hard to make a passive income month to month just from your investments. Now, a lot of people use investing as a way to grow their money, and then they'll sell the investment after a year or 2 years or a specified period of time and double their money or triple it or whatever the case might be. While this can work, especially for people who put in the time and effort to study the investments and see where they're projected to grow for most everyday average individuals, this is probably not the path that you're going to be taking. Just because you're not studying your stocks and looking at them every single day, or your bonds or whatever investment vehicle you have, and a lot of people don't want to put in that much effort. Be sure to subscribe, follow along on my journey if that's what you would like to do. For most people, this short-term investing is probably not going to work unless you're putting a lot of time and effort into really digging deep and studying those investments. The purpose of investing for most people is to make money, but it's generally to reach other savings goals or financial goals that they have in their financial plan or in their lives. Now, you may not have sat down and said, oh, I want this goal and this goal and this goal. It may be in the back of your mind, oh, I want to do X, Y, and Z. But investing can be a way to maximize upon those goals. For instance, most people haven't sat down and said, oh, I want to retire. They just feel like that's a given. But that is a goal in their mind, and investing is a way to help them reach that goal. Or, I don't want to have a job within X amount of years, which I guess is similar to retirement, but a lot of people actually have goals to create this passive income for themselves so that way they don't have to go to a stereotypical job even younger than some sort of retirement age. And if that's your goal, that's fantastic, but you're gonna have to really dig deep and save a lot, live a very frugal lifestyle in order to meet that goal, or be making a lot of money currently that you can be prioritizing to put towards that goal. So even with investing, it's not a quick fix to somehow get a bunch of money super fast in most cases. Once again, I mean, if you go to the lottery, you could potentially win. It's the same thing. If you aren't studying stocks or bonds or any sort of investment vehicle, options, futures, and you just decide, okay, I'm gonna put all my money in there and hope it goes up. I mean, yes, you might have a chance that it does, right? There's always that small percentage chance, but most likely if you haven't done your research, it's not gonna work for you. The first type of investment that I'm gonna be talking about is a stock. When we think of investing, a stock is generally something that has been talked about or that we've heard about, and it's generally the most common type of investment for average everyday individuals, but kind of at a different level, which I'll go into a little bit later. A stock is theoretically just a small piece of a company. So if you're wanting to buy a piece of that company, you get to then share in its profits and losses. Okay, what else did I want to say about stocks? In Shark Tank, this is almost a common example of what stocks can theoretically look like. They invest in that person's company, and in return they get a share of or equity in that individual's company that wants to have that investor on their team and also wants the money associated with that. So when you're putting money into a stock, you're saying, hey, I'm going to invest in your business. Here's some money. I'm a part of this now. And generally, you can even vote on shares. Another cool thing about stocks is that when you put your money into stocks, many of them, called dividend-paying stocks, will pay you a dividend. What is a dividend? Well, it is just basically money that, it is boiling here, guys. I'm not joking. It is boiling.
boiling. We save money by not paying for not using the AC and it's hot. Stocks are really, really cool because when they pay dividends, they literally pay you to have the stock. So in some companies that are dividend paying stock, they say, hey, because you're a part of our company and we value your input here and we value the money that you've provided, we are going to make a dividend for however many stocks you have every single month or every single quarter, and these stocks will literally pay you just for having the stock. This is something, once again, that a lot of retirees like to put into because then they get that passive income from all of their money that they've placed into that dividend paying stock. So you can literally have $1 dividend a month, but hey, that's $1 a month that you didn't have before. You can choose to have your dividends reinvest back into the stock, so it'll buy a teeny tiny little piece of that stock once again, or you can choose to have them pay out, so they'll pay you or pay your account. And there's different ways that you can have that function. But that's really cool because you get to earn money off of literally having that stock and doing nothing else.
A bond is another type of investment vehicle.
With a bond, you are literally lending that money to someone else, to a different business, and getting paid interest because of it. Now, with bonds, you're much more committed to that bond. So you have to choose, am I going to do this or not? Because there's a lot of times penalties if you redeem your bond early. Redeeming a bond is just when you sell your bond or you're done with your bond and you say, hey, I want to get my money back along with just the interest that I've accrued. And a lot of times there's a penalty associated with that, such as 3 months of interest or 6 months of interest or X amount of dollars. So you really have to look into that, but in some cases it's really so low that you're just like, okay, that's fine, I want this anyways. But bonds are really cool, like I said, for those older retirees who are just wanting to have that passive income. Another type of investment is futures and options. The thing with futures and options is I don't know everything about them. Crazy, right? I really don't. I did study them in college for like a millisecond. We had a very short, I don't even think it was a full chapter on them, maybe like a paragraph, just briefly chatting about them. There are some people like analysts, financial analysts, and like stockbrokers, maybe stockbrokers, and then really like deep personal finance people who do study futures and options, and they really dig down deep into the details, and they can do that very well. So I would check out like one of their videos if you want to learn more about that. But for the average everyday individual, most people aren't investing in futures and options just because the risk level is so high, and the return can be super high too, but like the risk is so high. So you're not wanting to put your retirement funds or like your house saving funds into a future that could completely collapse, or into something that not only could collapse, but you could also owe money on. So from my understanding.
Mutual funds are kind of like another type of investment, but this is the one that you're really going to be investing in if you have some sort of retirement fund, or if you're just an average everyday individual like me and my family, my husband, almost everyone is going to be investing in mutual funds. Okay, maybe not everyone, but I mean, if you've got a 401k, you're probably already invested and you just don't know it yet. So a mutual fund is just a collection of stocks. So it's a collection of these companies, and you mush them all together, and that's what a mutual fund is. So when you buy into a mutual fund, there are going to be managers of that fund, and they are going to be picking out the stocks because they're studying it day in and day out. What stocks are improving the best? What's going to help us continue to grow this fund, grow this account, etc., etc., etc. They're studying that all for you, and so there's a small fee associated, which is usually a percentage each year that you pay to be part of that mutual fund. With some mutual funds, there's even a certain dollar amount that you have to have in order to get into that mutual fund. The thing with that is most people are more than willing to pay that small percentage because the mutual fund is growing year after year more than even that fee percentage really is. So, what should your priorities be when investing? What type of investments from all that we've talked about should you be putting your money into? Here's the deal. It's going to be different for every single person. That is why I actually financially coach people to help them understand what's going to be best for them, whether they have the bandwidth to invest right now, or if they don't, or if they are investing, what types of investment vehicles might be best for them. While I cannot give advice on what type of investments are going to be best for you or for everyone, most certainly not, because you have to have certain exams and licenses in order to do that, I can just give you a little bit of insight and education about each of those and draw some conclusions for the average person from there. Be sure to check out my financial coaching if that's something you're interested in at the link below in the description. For most people, you're probably not going to be investing in options and futures. Most people just really don't. They don't have the detailed analysis and time to put in that effort to research all of that. So for most people, that's just not the level of risk that they're willing to take. Plus, you can lose a lot of money with both of those investment vehicles, and so that's something that not a lot of people are really thrilled about doing, is losing tons and tons of money, Probably not. But stocks, bonds, mutual funds, those are all three different types of investments that at one point in your life, you're probably going to have all three of. Stocks I think, are really interesting to look into, and a lot of those investment boys or people obsessed with investing, they have got their money in stocks, and that is something that they love doing. Sometimes they put some of their money into bonds, but a lot of times they're looking at the stocks and they're really studying them. I think mutual funds are very nice for the average everyday individual because they do diversify your income automatically just by having a mutual fund. It's tons of tiny different types of stocks, and you can even buy different types of mutual funds or invest in different types of mutual funds because they have a mutual fund, like a European mutual fund, and that'll have a bunch of European stocks, or they'll have a small cap mutual fund, which is in small companies, or they'll have a large cap, which is in those big companies that you always hear of, like Facebook, Apple, blah, 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 blah. There's a lot of diversifying that you can do even within mutual funds. If you are just wanting to kind of diversify, make sure that your risk is kind of low, but your return is still average or above average, a mutual fund is probably going to be the way to go for you. There are other types of investment vehicles that I didn't really talk about here yet, such as bond funds, which maybe you can deduce what that means. Let me know in the comments if you know what a bond fund is or you have a good guess, because I think you guys are probably going to be able to guess that one pretty easily. Maybe, I don't know. I'll respond to them. And then there's also ETFs, which are very similar to mutual funds, but those can be a topic for another time. We will talk about them. We will be talking about more things finance coming up, more things wifehood and homemaking. Thank you so much for watching this video. I truly hope it was helpful for you guys.